Fluence Energy, ticker symbol FLNC, has been in free fall, losing over 60% of its value in just 10 weeks. From a high of around $26 last year, the stock crashed to just $5 to $6 today, with a one-day collapse of nearly 50% after its most recent earnings report. But what caused this brutal sell-off? And more importantly, is this a buying opportunity or a falling knife? Let's break it all down. The big trigger? Fluence's first quarter 2025 earnings bombshell. The numbers were a disaster. Revenue fell 49% year over year, missing Wall Street expectations by nearly $200 million. Net loss doubled to negative $57 million, much worse than analysts predicted. And worst of all, guidance for the full year was slashed, with revenue projections cut by nearly $600 million and EBITDA forecasts slashed in half. This earnings miss shattered investor confidence, triggering a massive one-day sell-off where FLNC stock lost almost half its value overnight. But this isn't just about one bad quarter. Several factors have been weighing on Fluence for months. Project delays, especially in Australia, led to lower revenue and earnings shortfalls. Crushing competition has driven prices down 35 to 40% in the energy storage space, squeezing margins. Macroeconomic headwinds like interest rate hikes and clean energy policy uncertainty made investors pull back from high-growth energy stocks like Fluence. And Wall Street did not take this lightly. BMO Capital downgraded FLNC, cutting its price target from $22 to just $10. Bank of America slashed its target to $8, citing execution concerns. Other analysts dropped their targets as low as $7. And it shows in market sentiment. With short interest now at 24 to 28% of the float, traders are heavily betting against a recovery. Despite the chaos, there are some bright spots. Fluence has a $5.1 billion backlog of orders, meaning demand remains strong. They just launched a new high-density battery system called SmartStack, aimed at improving margins. The company raised $400 million in cash to strengthen its balance sheet and fund expansion. And in a strong vote of confidence, a board member bought 10,000 shares after the sell-off at around $6.56 per share. Could this be a sign the worst is behind us? So, is FLNC stock a buy at these levels? Here's the game plan. If you believe in the long-term energy storage growth story, this could be an opportunity. The stock is down over 70% from its highs, and some analysts still believe Fluence can turn things around in 2026. But we need to see signs of a recovery first. If FLNC fails to hold this level and momentum stays bearish, we should have a strict stop loss at $4.80 to protect capital. If the stock breaks below $4.80, it could signal further downside, and cutting losses would be the smart move. However, if we see buying pressure returning, this could be a major reversal play for risk-tolerant investors. Bottom line, Fluence Energy is in deep trouble, but it's also at a potential turning point. This is a high-risk, high-reward setup, perfect for traders who can manage risk. Will Fluence turn it around, or is this just a dead cat bounce? Let me know your thoughts in the comments below. Subscribe and stay tuned for market updates.